Hello and welcome to another update video about Ethereum. In this video I'm going to show you the two main wave counts that I think are possible here, that are going to tell us which movements are now possible with price targets for Ethereum. So we are going to take a look at that now. First of all, let's start with this scenario, which is still possible, which I showed you in previous videos. It just had to be changed a little, but not from the last video, so there is no change. This scenario means, or is highlighting, that from the high at 2030, we came down in a 5-wave move in a wave A. We moved up, or we are moving up, in a wave B, ideally getting into this region between 1770 and 1920. This is still an area that we can focus on, but again, there is at the moment no guarantee that we get there. However, if this is the count, we should eventually get there because of the length of the wave 1 here. But I'll show you the targets in more detail, and we would then come down in a wave C here into the region between 1120 or 1130 and 1330. Could still drop lower also in a wave C of wave 2 scenario, but every downside should remain above $1,000 to not invalidate or basically invalidate or make more unlikely the long-term bullish count. So what that means is if we drop below $1,000, I would increase the probabilities of the bearish scenario. Where are we here now? So in this scenario, we say where we do this wave B to the upside here in blue. A wave B is a 3-wave move, so consists itself of 3 waves, and there are now different targets we can look at. So in this wave count, we say that this here was wave A. We then moved down in a very long wave B, actually, sideways movement that caught a lot of people out, and then moving up in a wave C. So there are 2 targets for a wave C in general, and we need to be aware of that. So one key target, and that is something we really need to be aware of and use well. So one key target is if we take the length of the wave A and we add it to the beginning of the wave C, you basically get the first target here is the 1-to-1 ratio. That is, the A wave is the same length as the C wave. That is at 1675. So basically that means we are just below resistance. It doesn't make a great difference because we are also just below the 50-day moving average. So personally, I would stay away from any long trades at the moment because this is a resistance. I would never go long just below resistance. It is risky, okay? Just so to add that, because we're just below that, we're just below the 50-day moving average. Which of these levels is eventually relevant isn't really too important. What you need to understand is that we are just below resistance, okay? So this is the first level. So we could already be bouncing off from where we currently are, because it is quite a difficult situation here. We're just below 2 key resistance levels, so be aware of that. We could be turning down at any moment, and that would be in line sort of with the previous, with the alternative scenario, or let's say the second scenario. In this scenario here, or in this situation, I don't really like the name primary and alternative, because both scenarios are highly probable, okay? Both are highly probable, and that needs to be reflected in your risk management. And one decision that you could make as a trader is to stay away from this trading, from this situation here at all, because it leaves possibilities open at the moment, yeah? It leaves possibilities open. There are 2 key scenarios that can unfold here, of course, and we just need to understand that both of these are possible. But again, by Ethereum dropping so hard here a couple of days ago, where you now see the new wave B low in green there, the fact that we dropped so hard basically resetted this wave C to the upside. Before that, we had the wave B low further on the left hand side, I think here, but that choppy price action was not a wave C to the upside. Well, it could have been an ending diagonal, but the problem is that we dropped too hard here. But yeah, this is the first target, and we're just below resistance. Now the next target is the 1.618 extension. That is at $1,784.85. that is in this larger target area. This is also why I have this target area, yeah? So this is the first target. The next, or the second target was that. The next target is here if we just count the wave C. So if we have here the C wave is a 5-wave move, we assume we've seen the wave 1 now here. Yeah, maybe that goes a little bit higher, but let's say we have a wave 1 here and we come down now maybe to 50% of that roughly. We can't calculate that yet because we don't know yet where the wave 2 low is, but roughly let's say we retrace 50%, then the target would be around 1830 for that wave 3 here. Yeah, so that would also be in the middle of that yellow area. So that is it's a relevant area where really the price could reverse down. So as per this scenario, we would need to avoid to make a low below 1495 now. So below the swing low of the wave B. If we go below this level, it will invalidate this count, and best would already be to avoid a low below 1527, because whenever we go below the 78.6% fib level, it just makes it less likely that it still is that kind of wave pattern. Then we obviously have the other count as well, which actually, you know, sort of shows us the opposite, okay? And that is why I just told you it could be a decision just to stay away from this at the moment. So be aware that in this scenario, as I just said, I would personally not go long now because we are just below resistance. We're just below the 50-day moving average, just below that previous swing high. So until we really break above this level at 1687, for me, it's not really clear in which scenario we are. You know, of course, a possible trade setup would be to wait for that wave 2 pullback, go long here, speculating for a little bit of a rise in prices. But again, this is all very risky at the moment. There is no high probability setup for me here. Yeah, let's say high. That is sort of, let's call it safe. There is high volatility here, and in this situation, I'd always use a stop loss anyway. But be careful about that. Just want to say that. But the other point is then here in this other scenario, where we have the situation that we could say, all right, we're moving in a WXY pattern, that this X wave is finished. It was finished here. We came down already. So it would indicate that we are now in the Y wave. Yeah? And in this wave Y, we might have already seen the wave A. We're moving up in a wave B, even though that is quite strong, that wave B. But any further upside, and very important, any further upside in the wave B needs to remain below that 1687 level. So that's what I mean. If we break above that level, also here on the ETH chart, if we break above this previous swing high, this one here. Yeah, if we break above this swing high and above the 50-day moving average, it will make this WXY scenario far less likely. It would then indicate that, yeah, probably the wave X wasn't finished. We would have to readjust this. But this is basically here the scenario that would suggest that we're going down very, very shortly. Any further upside, any further weakness now here in the chart would rather confirm this particular scenario. So, for example, if we don't get above 1657, which is here that swing high, if we don't get above 1687, yeah, I mean, we could still see a little bit of rising prices in the wave B, but it needs to remain below 1687. We already need to be here on high alert that this could come down at any point. And if we then see a decline in 5 waves, this hints that wave B is complete, that wave C has started to unfold, and that would be confirmed below 1495. And this is where these two charts come together. As I said to you, if we drop below that 1495 level here, also on the other count, that would indicate that this particular ABC scenario is invalidated, and that would put more emphasis again on this one. So at the moment, both scenarios are highly probable. I would like to see here more clarity. I'm sure you as well. But at the moment, we just need to see how the market decides. Of course, you can trade this, but it's highly risky because both scenarios are possible. And, you know, anybody who wants to wait for or wants to see more clarity could, of course, you know, wait for the breakout of that range that I indicated, those two key levels, 1687 and 1495. You can, of course, trade the range. That's entirely up to you how you then use this information. I can only share with you my current view here, how this market develops at the point when I make this video, yeah. And this can, of course, change in this current situation actually quite frequently, because the current situation is highly volatile and we're in a corrective wave, and the corrective wave is always very, very difficult because it's very choppy and very very choppy. You have a lot of overlaps, you know, it doesn't really start to get moving and so on. Okay, and that's my update about Ethereum. So hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.